Welcome to an accounting video brought to you by Simplifying School. In this video, we will look at the different groups of accounts and how to decide in which group an account falls. The main groups of accounts into which all ordinary accounts fall are assets, liabilities, owner's equity, which is then subdivided into income, expenses, capital, and drawings. Students of all levels often get confused about which group a given account falls into. I always explain to students that if any of the following applies, one can safely assume an account forms part of the asset group of accounts. Firstly, if it is money, whether cash, in some petty cash box, in the till drawer, or if it is in a bank account or in an investment, that is an asset. Secondly, if one can sell the item after using it, and any reasonable person can be interested in buying it, it will be an asset. Now, what does this mean? Well, will any reasonable person buy used cleaning products? Will any reasonable person buy your telephone bill? Will any reasonable person buy used stationery, like an empty pen or a pencil that is only a centimeter long still? No one would buy any of these items, therefore they are not assets. Will someone buy a second-hand car, a used computer, a second-hand table or chair? Yes, it is common practice for these items to be sold after being used. Therefore, we can safely assume they are assets. Thirdly, any person or company that owes you or your company money is also an asset, because this debt owed to you will turn into money either in cash or in your bank account when they pay the debt. When is an account a liability? When you owe a company or a person money, that is a liability, as you need to pay them the money you owe them, either in cash or via transfer at the time you agreed upon paying them back. Capital is anything an owner puts into the business. This can be cash or items such as equipment, vehicles, or buildings. Drawings are whatever a business owner takes out of their business for personal use. This can be money, equipment, vehicles, or even stock at cost price. But be careful and take note. When a business owner pays the selling price, he or she will be an ordinary customer and it will not be drawings. It is important to note that drawings only happens when the stock is taken at cost price. When does something fall under income? Income is any money coming into the business, either immediately or that will come into the business when someone who buys something on credit agrees to pay you some given time in the future. In other words, debtors, they buy now, but they would agree upon paying you sometime in the future. When can an account be classified as an expense? Remember, earlier in this video, we looked at how to determine if something is an asset by asking if any reasonable person will buy the item if it has been used. You can ask the same question here, and if your answer is no, it is an expense. No one will want to buy my empty pen or an empty bottle of cleaning products or my electricity bill. Therefore, they are all expenses. This is an easy way to determine into which of the 6 main account groups an account falls. Why not share this video with everyone in your class and subscribe to this channel for more videos covering topics you are studying.